Evolution AB feels like meta platforms in 2022. In this video, I will show you the situation with Evolution AB at the moment, and I will compare the situation with what we had in 2022 for meta platforms, because I think these two situations are very similar. If you look at Evolution AB stock right now, the stock has done nothing. Let me put my face here. Let me lock my face. The stock has done nothing for 4 or 5 years, and it's exactly the same situation we had for meta platforms, Facebook, in 2022. A lot of hate, a lot of risks, and the situation turned really quick, and then for meta platforms, the stock exploded. So in this video, without much script, I will show you how similar these two situations are, and that will be the opportunity for me to explain why I own Evolution. Because if these two scenarios are similar, it's very likely that Evolution AB stock will rebound and go higher to all-time highs. In case you are new to this YouTube channel, welcome. My name is Christophe Nour. I've been investing in the stock market for almost a decade now, and I have achieved a performance of 25% per year. And I own Evolution AB. I own meta platforms, and now Evolution AB is 10% of my portfolio. And I've been a shareholder of meta platforms for a while. I first bought my shares in 2018 and then doubled down around here, and then bought this dip that kept on dipping again and again. And I bought until like $150, something like this, around here. And what I experienced during 2022 is very similar to what I currently experience for Evolution AB. So, okay, now in the next minute I will explain what Evolution does, in case this is new for you. I don't know why you're watching this video, but okay, why not? Evolution AB is a provider of games, online gambling games, B2B games. They make games for online operators, for casino operators. Okay, that's it. That's a B2B. And it turns out that it's very profitable to make these games. Evolution is the leader with a lot of market share by far globally, and they have operations in everywhere, in regulated markets, unregulated markets, Asia, Europe, North America, everywhere. And they IPO'd in 2015. The company was created in 2006, and since then you see a lot of growth, revenue up and to the right, net income up and to the right, free cash flow up and to the right. They don't have much debt, they have a lot of cash. The return on invested capital, the ROIC, is 30%, and they have extremely high margins, net margins of 60%. That's the story. And it turns out that in 2020, 2021, the revenue was growing 80%, 90%. And people extrapolated this growth, and the stock went really high because of people doing some analysis estimates that this business would grow 90% forever. Spoiler alert, it's very difficult to double your revenue every year. So now the revenue has slowed down a little bit. If you look at quarterly, you see that the growth in blue slowed down a little bit, and now the business is only growing 15-20% per year only. So people realized that and sold the stock. And when we were at the peak of euphoria here, the PE ratio for Evolution was really high, the valuation was really high, the PE ratio was 70, really high. So when growth is slowing down, this goes down, go down, go down. And now the valuation is not the same at all. The PE ratio for Evolution is 12, 13, 14, much more reasonable. So what is the good PE ratio for a business that grows 15-20% per year with these margins? So there is a clear discrepancy. I mean, on Guru Focus, you have this indication of if the stock is undervalued or not. Like, it's showing extreme undervaluation here. Maybe it's a value trap, maybe not. And I will show you why I think it's very similar to meta platforms. Okay. The first thing why it's very similar is that now everybody is aware of all the risks for evolution. All the risks are on the operating table. Slowing growth, regulation risks, diversification into unregulated markets, competition that is growing, pragmatic and playtech, mostly pragmatic. Now for evolution you see some competition increasing their quality of games. You have how do you say, the gambling market that is being impacted by short-term stock trading. So as a whole, the online gambling market is slowing down. You have a change in management, CFO. You have a bad capital allocation policy because they don't do much buybacks. They continue to give dividends. You have the margins that are going down because they plan to do some expansion in the US. I mean, the Evolution is a company operating worldwide, and they plan to invest massively to go into the US market. That is growing 20%. That's fine. And instead of having cheap labor in Europe, now they have to pay higher wages, higher salaries in the US. So the margins are likely to go down. And the regulation in the US is different from regulation in Europe. You have to build some studios in the US. So you have to build studios on each state in the US because each state of the US has its own regulation. So it's not really cost effective. The margins will be dragged down a little bit. So instead of having an operating margin of 62%, maybe it will go down to 50%. So that's a worry. The business will become less profitable over time and less growth. Okay, so that can be worrisome. Additionally, you have the UK gambling authority that is currently investigating Evolution because they are not sure if people are having a license or not to operate with these games. So you have more regulatory risks to this situation. Also, the CFO is leaving. We learned a few weeks ago that the CFO left, and they have been looking for a new CFO for a while now. And seems like the new CFO that they hired, CFO stands for Chief Financial Officer. Seems like the new CFO that they hired doesn't have a great track record. The two stocks that he was the CFO for, the stock prices went down or was flat. So nobody really understands their choice of choosing this new CFO. Okay, that's the picture for Evolution right now, and these people start to realize that this is a sin stock and somewhat it deserves a discount to valuation. And people are saying that the stock price will go down, the valuation will go down, PE ratio of 8. Wall Street analysts are putting down their price targets for Evolution. So you have this bad momentum, and every time the stock started a rebound, it collapsed. So now we have 4 years without any performance. Okay. During these 4 years, what did the business do? Continue to explode, continue to grow without any debt, continue to generate free cash flow without any debt. And you see here that their return on invested capital, ROIC, is increasing, and it is now 30%. So you are still talking about a very efficient business model. Okay, now let me explain the situation, what happened with Meta Platforms in 2022. Before the crash that we experienced in 2022, Meta Platforms was a great business, very profitable, great CEO, etc. And then it was called Facebook at the time. And then they changed their name for Meta Platforms. Okay. And then they introduced the VR headset stuff, the Reality Labs segment, and they burned some cash. And they announced out of nowhere that they will burn dozens of billions of cash into the virtual reality headset. Out of nowhere. So people were getting scared here. And then you announced that the growth in users is slowing down for Facebook, Instagram, blah blah blah, etc. Oh, that's another worry. Growth is slowing down. Does it remind you of evolution? For me, yes. And then they announced that they have new competition with TikTok that is coming. Oh, okay. Does it remind you this competition threat with evolution? I mean, TikTok is a real threat to Facebook, Instagram, because TikTok is big. In comparison, for Evolution AB, their competition, they have Playtech and Pragmatic. Playtech is a public company in the UK, not that profitable, not that efficient. And you have Pragmatic, that is a private company, growing nicely. But they are very small, so in terms of competition, that's even more in favor of Evolution. By the way, if you're looking for a complete framework to analyze stocks and build a strong portfolio, I have a coaching program. More on that at the end of the video. Okay, now you have new rule for meta platforms when it comes to regulation. Cookies, third-party data. You have the ATT problem with Apple. Now Apple chose to how can I say it? Slow down meta platforms and their cookies, and you can't use the data anymore, GDPR, anything. So regulatory-wise, meta platforms was slow down, and they had to invest in-house in AI to have their own algorithm and track people in-house instead of relying on Apple's services for the cookies. They don't have the partnership with Apple anymore, so you have to do it in-house. You have to invest massively, a lot of costs, a lot of regulatory risks, regulatory concerns. Additionally, there was some rumors that meta platforms would be broken up, so additional regulatory risks, and you had some campaigns, delete Facebook campaigns, a lot of articles saying very bad stuff about the CEO that had lost its touch, that Mark Zuckerberg was going completely crazy, and they hired some bad people, bad workers. You have regulatory risks very similar to evolution risk, because now the risk of evolution with the UK, for example, is only dealing with maybe 5% of the operations. So we all talk about regulatory risks in the UK, but that's just 5% of the operations. The rest is fine. You have looming risks for other unregulated markets, but that's fine. And I'm telling you, for the regulatory risks for evolution, now we have a problem with the UK. Okay, it's not the first time a country has this kind of discussion with evolution. Italy did the same thing. I think it was Denmark a few years ago. And every time a country did this commission, gambling commission, fine, this threatening, evolution was very cooperative, and they changed their policy a little bit. They confirmed their choice of being in this market, and it went well. No specific fines, no big disruption, and evolution continued to growth. And okay, so now you start to see some similitudes. Growth slowing down for both businesses. Margins expected to go down for both businesses. But still, these businesses were growing at the time. In 2022, look at this. I mean, slow down and then back up immediately. It's even better for evolution. You have no negative growth. The company is still growing massively, profitably. Okay. The two companies have no debt. Okay. They have a lot of cash. Okay. They generate some strong cash flows. Okay. The return on invested capital for both companies are extremely high. It's at 30% for evolution, and it was 25% for meta platforms. Okay. Nice. Then in meta platforms, Sheryl Sandberg, the COO, the partner of Mark Zuckerberg, Sheryl Sandberg left the company. Peter Thiel left the company in 2022. So your biggest investor and your biggest partner are leaving the company. That is a big change. And you have David, I'm blanking on his last name, David Weiner, I don't know, I'm sorry, the CFO of Meta Platforms left in 2022. and he was replaced with a new CFO. Oh, okay. Now we learned a few weeks ago that Evolution is changing their CFO. A new face that nobody knows. Oh, okay. Very well. When it comes to valuation, also, Meta Platforms had a PE ratio of 30 before the crash. And now they had a PE ratio of 10, 12, something like this. Does it remind you of a company? Evolution was having a high valuation, and now they have a PE ratio of 12, 13, 14, but still the company is profitable. Still the company has no balance sheet issue. And both are positioned in a growing field, in a growing industry, are the leader in this industry, have a competent CEO. They both have shown some efficiency in the past, strong track record, strong growth runways, still growing profitable, and the fears are overblown. I remember in 2022 when Meta Platform stock was completely crashing, we had a lot of worries, and all the risks were on the operating table. TikTok risk, regulation risk, ATT and cookies risk, and then demonetization, and then a lot of risks were priced in, and you have 7, 8, 9 risks at the same time. And people said, okay, Peter Thiel left for a good reason. He knows something. And then the CFO left. Oh, he left the company. He should have known something. Or same thing for Sheryl Sandberg. And people said that Mark Zuckerberg was completely crazy, burning cash with the Reality Labs segment. You know what happened next? The company went in efficiency mode. The CEO fired people. The workforce was reduced. They were getting leaner, stronger, more efficient, and growing again. And they ramped up their monetization for Instagram, more revenue, more ads. They started some good measures to get some cash flow. They started some good buyback program, and growth went back to full growth mode actually. The only difference I have with Evolution that is maybe worrisome is that the CEO is not as high quality as Mark Zuckerberg. Mark Zuckerberg is in the top 5 CEO of our world. Nobody knows the CEO of Evolution. Out of these, I have 2,000 subscribers. I don't know how many people will watch this video. How many of you know the CEO? How many of you knows that the CEO joined the company when the company became public here in 2015? He was not the founder of the company. He has some skin in the game, but not that much. He doesn't have all the voting rights compared to Mark Zuckerberg. So when it comes to governance, this is a change. Speaking about governance, the founders of Evolution still own more than 10% of the shares, even more. And now you have some insider ownership coming from the head of US Evolution AB buying more shares right now. You have Kenneth Dart, who is an investor that owns 5% of Evolution. This big investor is doubling down on Evolution and has bought more shares now. So a big investor owns 10% of the shares. Owners, founders still have a good chunk of the shares. If you sum this up, maybe this is the equivalent of Mark Zuckerberg. But governance-wise, management-wise, I see a key difference here. You don't mess with Mark Zuckerberg. Mark Zuckerberg from Facebook has shown many times that he will rebound even stronger. And every time the stock dropped, people were doubting him. But I don't know how you can doubt Mark Zuckerberg. This is completely crazy to me. He has shown so many times in the past that he's one of the best. This would be the only difference I see. But all the rest are similar scenarios. Growing profitably in a growing business, still the leader, still generating strong cash flow. The slowdown in growth is only temporary. All the risks are on the table. There is a change in management, change in CFO, and all the fears are overblown and nobody wants to touch the stock. Valuation is a PE of 12. This is very similar to me. So that was it. That's why I own both of them. And I remember when I owned Meta Platforms here, all my gains evaporated, all the stock options for the employees of Meta evaporated, and then they started to implement some good policies to create some good free cash flow. So it can turn fast. In 1 year, the stock can rebound really fast, and this situation can be very similar to evolution. In 1 year, the stock can be a double from here. That can be totally possible. Sentiment is shifting, and as we say, price drives narrative. So now people are fearful and only highlighting the bad stuff about evolution. But I'm telling you, here in 2021, nobody knew the risks. Nobody cared about the risks, actually. People only saw the growth. The moment the revenue growth is picking up again, people will instantly forget all the risks, and it will turn out that the risk will be overblown. This is my opinion. Maybe I will be completely wrong on this one. Maybe evolution is doomed, but I'm biased. Obviously, I have 10% of my stock portfolio invested in evolution. I think this will be the case. Maybe I will be completely wrong, and I will update you guys. But this is how I see the situation right now. If you like this content, I have an investing coaching program. In this program, you will learn a complete investing process. You will learn how to find good stock ideas, how to properly value stocks, when to buy, when to sell, so that you can build a strong portfolio. Additionally, you will have access to my personalized guidance for long-term results. We will do weekly calls where we analyze stocks together, and you will have access to my private number available 24/7 for full support. If you are blocked, if you have any questions, I'm here to help. Click the first link in the description to get more information. You will get a video that explains how everything works completely for free. No need to sign up, no need for your email address. Just click the first link in the description and I'll see you on the other side.